it's unlike the cash flow portal. It's really a regulation crowdfunding portal, and that's required to be registered with FINRA. So it's a little bit of a different type of platform. It has all the functionality like the cash flow portal, but to do these types of crowdfunding deals under the regulations very specifically, you have to work with a FINRA. FINRA is a self-regulating body that oversees all the investment firms of America. So I actually went through the process of registering. There's a whole lot more compliance, but that actually allows you to have these regulation crowdfunding investments on the platform, which really actually just means that you can advertise, solicit for your opportunity everywhere, and accept everyone rather than that traditional Reg D accredited investors only. So that's just to kind of set the stage a little bit.
Now, Wednesday, I would love to. I know that crowdfunding is a big topic, and I would love to kind of. I know we got a short period of time. I'd love to kind of get some questions answered. If y'all might have any questions, kind of start from there. If not, then we can kind of go about the gist of what is crowdfunding and how we want to do it. Lenny in the house, big Lenny.
How you doing, Corneilous?
Oh, man, how you been, man?
Great.
Great.
Hey, I think I remember for the Vegas deal that the max that the crowdfund was allowed to bring was 5. How much were you actually able to do? And I do think it's still active to take care of the CapEx, right?
All right, for the deal, yes. So what it is so the regulation crowdfunding allows 5 million per year, right? Now you can chop it up how you want to, but it's 5 million per year. Yeah, so the reason why crowdfunding got more popular now because it used to be 1 million. Like I think like in 2021, they actually increased to 5 million, and now they're going to increase it more in the future. That way, it'd be more accessible to more non-credit investors. But right now, as today, the legal guideline is saying, as the say, you can do 5 million in 1 calendar year. Now you can do it in multiple deals. You can do it all in one deal. You can do a 5 million. So what they done is you probably staying with they do something called side-by-side offering, where if you need to raise more, you will have a Reg CF on one side, and you also have a 506C on the other side. So like before, as you do with any offering, you say, hey investor, are you accredited or not accredited? And the strategy behind that is to try to fill 5 million up with not credit investors. Say your credit investors go into my 506C. So it allows you to promote the deal to everyone, just like a Reg A, but you have the ability to get your family, friends, and so forth, and also at a lower rate, because many times these deals, it takes $50,000 to put in. And think about it, a lot of people don't have that to put in, or if they do have it, it may have it maybe once every 3 years, and they still be a part of these deals. And one of the things that I like about crowdfunding because of it allows you to still play the game, right? Because think about it, if you look at statistics, over 90% of America is not a credit investor. So the chances are people is not be a part of it, right? But people want to be a part of deals. And also, I think in my experience as a capital raiser, right, or trying to raise capital, a lot of times people ask you, well, if you're doing so great, why aren't you investing in it? You don't want to say, well, I didn't have the money to invest in it, or I'm not a credit investor. Sometimes like this allows you to get in the game, and that way you have the conviction, like, yes, I'm part of it too. So it allows you to get in the game, so that way you start you can start practicing what you preach, right? Because everybody say, do you got skin in the game? Well, I would if I could, but they don't want to tell you all that, expose all that factors. So I think personally, that's why I like crowdfunding, because it allows you to live with integrity.
I like it. Is there a max number of people that are allowed to participate on any particular deal through this?
When you say participate, you say on the GP side or the investor side, passive investor side? Which side are you referring to?
I think just the number of people that you can take. So for a 506B, I think it's 35 people that you can take, right? Mm-hmm. And so I was wondering if there was any type of limitation with regard to crowdfunding.
Now you Nate? What SEC?
Yeah, no, I'd love to take it. I was just sitting over here. I'm ready to cry because you're taking over the attorney's job. So I was absolutely loving it. Thanks, Corneilous.
It's working, yes. It's working.
Regulation crowdfunding completely changed the dynamic. You are absolutely correct. The traditional Reg D, the 506Bs, it's an unlimited accredited investors, also up to 35 non-accredited investors. That's just the classic private deals that you're not allowed to advertise. With regulation crowdfunding, it changes the calculation entirely. You can have as many non-accredited investors as come through the portal. Hundreds, doesn't matter. So really it changes from up to 35 non-accredited investors to $5 million is the switch of the strategies entirely. And we do definitely heavily promote this side by side because we all know you're doing real estate deals. It may take 10, $15 million in equity. So that's where it combining, having, they call them concurrent offerings with the 506C and the Reg CF still allows you to raise that 10, $15 million advertising everywhere, but then it just changes the script from the limited number of non-accredited to up to $5 million in non-accredited money.
So even like saying you say a 506B, right? Use like so use like let's do math, right? Let's say you want to raise $1 million. Okay, $1 million 506B. I mean that you got to find 35 of your family and friends to give you $27,000. I'm not sure about you, but I don't have 35 family and friends to give me $27,000, right? But can I find? Yeah, I know, but I know, but it's 26 more, right? but can I find 1,000 investors, 1,000 strangers to give me $1,000 to be a part of my deal? So it's almost promoting, it's almost saying, well, listen, my thing like, hey, would you rather buy another course or actually invest in a real deal and be a part of a real deal, right? And I think we all really want to be passive investors. We all want the lifestyle of put $1 in, get $2 back out. Right. So it's like, so it allows people to kind of make a shift in that offering. Hey, what do you want to do? Do you want to basically, because people already know multifamily, want to get involved in deals? Let me get involved in deals and try you out. And also, many times investors want to put a small amount in to try you out to see how you operate before you put more money in. So it kind of give you this testing word phase, if you will.
Cool. Thank you so much to both of you. Cornelious, I've learned so much from you since I started in this business. So
yeah, bring it back to marketplace. Thank you, sir.
Good seeing you.
Thank you. Good seeing you, man. Thank you. Thank you, Lenny. Jay, what's going on? Talk to me.
So, question: you said you could set it up to where you could have accredited investors and non-accredited investors. So does the accredited investors, do they go into that 5 million, or can you push it above 5 million with accredited investors?
So what we're saying is to answer the question both yes on both parts. However, we're saying is the crowdfunding ratio is only limited. So basically think about this, you have two offerings. Wait. Let's say you have raised $10 million for math purposes, right? So I mean you need two offerings. Crowdfunding will only give you up to 5 million. Now the other 5 million you can have a 506C as well. Now, question: you can fill your 5 million with accredited investors, but then now you start with that. Now you limit it to the amount. So the idea of it is to incentivize the accredited investors to go to a 506C over here and fill this up with the non-accredited investors. That's a strategy behind it. But however, the answer is yes. If you need 5 million, you can raise. You say forget the B. I can just do a Reg CF and put non-accredited investors and accredited investors in the same pile. You can if you want to. But more once that 5 million is filled up, then it's filled up.
Let me jump in there a real quick second, because when it comes to the accredited investors, there are reasons for them to go into the 506C or the CF. With the 506C, you have the accredited investor verification process. There is no verification with the regulation CF, the crowdfunding offering. It is like the classic, they check the box and you believe them. Now, in terms of how much they can invest, there generally are lower minimum investments, maybe 5,000 or 10,000. You'll see some that are like $500. I always encourage a little bit of a higher minimum investment, just makes life easier. In terms of the regulation crowdfunding, there's actually caps on how much most people can invest. If they're accredited, still, they can invest as much as they want. Now, there are limitations on how much the non-accredited investors are allowed to invest. And these are some weird numbers, but just to give you an example, if someone has an income of more than $124,000 and a net worth of more than that, then they can invest up to 10% of the higher those numbers. I like to use the example of, hey, you're got a job, you're married, household income's more than 124,000, you're worth $500,000. Now you can invest up to $50,000. However, if you're working with a retiree, they got no income, or they have no net worth but an income. Now they can invest up to 5% of the greater of those numbers. Same example, except for now it's a retiree, no income, $500,000 net worth. They can invest up to $25,000. So there are those limitations on how much people can invest, but there's not a limitations on how many people can invest.
I think too, with that answer, just because there are so many limitations, there's of course different regulations governing crowdfunding in general. If you guys could kind of cover just the lay of the land, I think that would help guide us for any questions that we might have as well. That'd be helpful.
Sure, let me roll with that one. There are really 3 or 4 different investment securities regulations. It's under the Securities Act. That's how you promote the suitability of your investors, how you find your investors. The classic, everybody has used it, generally most people know about it, is Regulation D. In 2012, it's split. Now we have multiple Regulation D rules. The classic is now called Regulation D Rule 506B, that you're not allowed to crowdfund and advertise, but you can accept an unlimited number of accredited investors, up to 35 sophisticated non-accredited investors, and raise as much money as you need. A newer rule that is really kicked off and started the crowdfunding is Regulation D Rule 506C, the other side of the B. That allows you to raise an unlimited amount of money, but you're limited to only accepting verified accredited investors, but you're allowed to advertise social media, webinars, seminars, email blasts. What this verification means, and I'll just tell you 90% of the time, it's a CPA that signs a simple one-page letter saying, Mr. Investor is an accredited investor. There's other ways to do it, but that's the only way that I see happening the vast majority of the time. So those are the very classic Regulation D exemptions that most people rely on. Something that is new, also started in 2012, is this Regulation CF. It's called Regulation Crowdfunding. It was completely worthless until 2021. You can only raise up to $1 million. That goes absolutely nowhere in business, and especially in real estate. They increased that to this $5 million per year, actually making it more functional and usable. You are allowed to advertise, again, social media, email, webinars, etc. But every investor that comes in, and I already touched on the investor maximums that they can invest, have to invest through this FINRA registered crowdfunding portal. It's a requirement for all Regulation CF offerings to kind of draw that distinction between cash flow portal and our Crowdfund My Deal FINRA portal. They're not FINRA registered, but they can work with any Regulation D offerings. On our side, we can help with the Ds, but we're really, you have to work with somebody like our portal for this regulation crowdfunding. And that's where, it is where we can have this side by side with the Regulation D and the Regulation CF, all combining to raise as much money as you ever needed.
So one thing I like to look at it as like you got three big things, right? You have the Reg A, the Reg D, and the Reg CF. Those are big main rules. And then what we used to is the exception to the rules, which is the Reg D. If I says C, if I says B, and those are exceptions to the rules. So you play by the rule, but you're playing with the exceptions to the rules. That's why it's a little more guideline because of you're playing by the rules, not exception. You're playing by the big rules. So it's so you're different level because now you can be able to do the public. In the public, you need to like you're doing a public offering, like almost stock offering. So you have to jump through these legal guidelines to make sure that you're compliant. But usual stuff is done through our portal, and we kind of help out in that process. So it's not really on the issuer or the regular.
Just because you mentioned the Regulation A, I didn't talk about it. I don't encourage anybody on here necessarily to do it, but it's kind of like the Big Daddy. You can raise up to $75 million. As an example, and this has worked really well. One of our largest clients on the law firm side is Grant Cardone. He sets up this $75 million REIT to bring in thousands upon thousands of investors. But even with what he's doing, he still has these Reg D offerings that go into individual properties. So it doesn't matter how big you are, these types of strategies really can, well, help you reach all of your capitalization goals. But this Regulation A is just really for the experienced, a lot of social media influencers that we work with, but the people that are bringing in thousands upon thousands of investors.
No, that's awesome. I mean, it sounds like the portal in itself helps govern a lot of the things that we need to think about, which is the hardest step, right? Complying with SEC. I feel like every day I'm learning something new that I might have broken. So with that in mind, I mean, what are some steps businesses can take to ensure that they're compliant with SEC regulations with crowdfunding besides just the portal itself? So I'm not sure
that actually is the secret sauce, is the portal. Because the portal, as basically a broker dealer light, as a FINRA registered portal, it's our responsibility to make sure that you're advertising and marketing legally and compliant. You don't have any oversight or people watching over your shoulders with the Reg D. That's where you can really step in it without really knowing or recognizing it at all. But on the crowdfunding side, all the marketing, webinars, presentation materials, etc., have to be run through compliance. So to make it as easy as possible, generally we go through and do the compliance all on the front end so that you can just get out there and start marketing, advertising, and putting everything out there in the world. But in terms of that compliance and not getting in trouble that you're referencing, that's actually a big benefit and part of doing the regulation crowdfunding portal offerings.
And one thing I like about that crowdfunding, because like they have something called testing the waters. Because one of the biggest things is like not being able to know if your deal is going to close, right? Raise capital. So testing the waters allows you to create a page and go out and basically test the waters and see who actually interested in investing in your deal before you even do the paperwork. So it allows you the freedom to, hey, this is what I'm doing. Is anybody interested? And how much are you interested for a dollar amount? So you can do that through crowdfunding called testing the waters, and basically shop your deal around to see if you get any interest before you actually go through the full process.
Something that we heavily encourage people to do, especially in the real estate world. You're going through the contract process, you're working on the purchase agreement, you're starting your due diligence. Start marketing for investors today. But if you ultimately don't end up moving forward with the deal, you're actually saving from spending the costs and getting the everything all together, ultimately making sense to save time and money for you. But, and here's a really important thing, your next deal, you've already got a database from this testing the waters of people that are already interested in what you're doing. So even if you aren't closing every deal, the more and more you're advertising, finding potential investors and getting out there, the easier it will be for you to close deals, bring in the investors when the deals, properties, businesses actually make sense.
No, that's awesome. I mean, I'm intrigued and I'm almost wondering, and of course, since all the reliance is on you guys from the SEC standpoint, is besides crowdfunding, it just seems like an overall good investment portal. Do you guys have the ability to use this portal for something such as a 506B or 506C offering for verification, things of that nature, besides just crowdfunding in itself?
Let me answer that because it gets to be a little bit touchy. With the 506Cs, absolutely. With the 506Bs, it doesn't change the component of you're not allowed to advertise and market it beyond your list of investors. And kind of another reason why Crowdfund My Deal is different than all of these other crowdfunding portals is generally they have marketplaces where you see all of the investments. You're out there marketing for investors, you bring them in, they're seeing every investment that the portal is handling. On our side, it is simply for compliance. We charge a lot less, but at the same time, your investors only are seeing your deal. With the 506Bs, there has to be a log on that you have to give the password to the people that you know in order to ever see the deal, which is a little bit different than the crowdfunding. It doesn't matter. You can just get out there and everybody in the world can see your deals. It's the suitability of who you accept and how you accept them that makes a difference. So long story short, yeah, you can do all of those deals on the portal. There's just extra steps for the 506Bs.
Gotcha.
Miss Sharon?
I was just trying to verify the site and I just went to a Crowdfund My Deal. And then everything we need to know about it is there. I see your services tab and, you know, your home and what we offer. And then you ask for a strategy call. Is that everybody has to go through a strategy call?
What is it? We invite everybody to a strategy call because one of the things that we do is to as we starting out, even with 3 Keys, we are heavily involved in your cap raising campaign, right? Making sure that you're successful, right? So it's not just you pay the money and you're out. We want to make sure that because we have a vested interest in as well you succeeding. So the strategy call kind of help out strategize what you need and what you don't need, and basically create a campaign with you so that you have a higher success rate of getting your deal funded.
Okay.
So strategy call is,
Secondarily, there's due diligence requirements.
yeah.
It's not like a portal where you sign up, you throw your deal on, and it's all over with. We actually are involved with the process, making sure that it's put together compliantly and well. All the right things are considered and thought about. And so we have a distinct process how that works. And it just starts with this strategy call.
Okay, last question. Do you guys get involved in the private placement memorandum that has to come out? Is that a part of it?
I've got a crowdfunding lawyers. We're a securities law firm. We can help with all of those. We do offer discounts if you're working with Crowdfund My Deal. But yeah, we help with all of these things.
Yeah. So one of the beauty that we have with Crowdfund My Deal is that we partner with Crowdfunding Lawyers. Now, the answer question legally, like you're not required to use them, but however we do. It's like they're there. So why not use them, if you will? Or you're required to use them, but you can't use them. And one of the things that a PPM is a private placement memorandum. Remember, now you're doing a public offering, so you will get something called a Form C to actually kind of take the place of a public offering. So walking through the process of doing all that together. So we literally hold your hand through the whole process, even after, even with 3 Keys, even Lenny can tell, we was on their webinars. We heavily involved in your raise to make sure that you're successful.
Wonderful, thank you.
And I know we only have about 15 minutes left, but do you mind kind of walking through just to show how that process looks like? And I use 3 Keys because that just closed, of when you guys were first introduced all the way to the close point, just so we can truly understand how you guys intertwine within, the funding portion of it, raising the capital through, reaching out to investors, having them go to your portal, verifying, just kind of those steps would help understand that whole process.
Good deal. So 3Key strategy was originally to do a 506B, get everybody in, then try to switch up to 506C, right? That was the main strategy. And they were doing that 506B, and they had multiple. They had let me see, can I say this legally properly, right? They had a few GPs with the expectations to help with the capital raise, right? As everybody try to think, if I need to raise 10 million, I need to get 10 different investors to bring $1 million each, and maybe I can get it done, right? But however, once again, that plan didn't work according to the plan. So like, what do we do our 506B? Can we do 506C? Will it help out? We say, well, how about just do 506C and do your 506 your Reg CF at the same time, and that way that investors can still get into the deal, because once you go from B to a C, everybody's cut off. Your 506B people, right? So we said, well, when you do 506B, let's launch our Reg CF at the same time. So that's what we did with them, and in the process, we kind of mapped out. Okay, this is your day here. This is your day. Your closing. What are we doing on each day to make sure that we get exposure to that deal? What can we do on the back end? Now legally, we had to do the background checks of the issuers, and also we had to do background checks of the investors as they come in, right? To make sure that they're not with the anti-terrorist act. That's what it is, because of public offering and so forth. So in that plan, we kind of work with them hand in hand to make sure that they have a good strategy in order to get it closed, right? What days you doing webinar? What days the reminder going out? And kind of help them out through the process of the marketing side of it, as far as give them some guidance. Is it, want to say properly? I'm trying to use light words. That's what the process was. Then, as you understand the portal setup, the investor relationship, as new investors come on to the portal, how your investors experience the portal, how can they get there on their documents in? Because of some people invested from cash, IRAs, in different ways, right? So we kind of work with that on the back end as well. Nate, you take over, Nate. Anything to add?
Sure. 3Keys, it was pretty unique. They already had a investor portal that they had their deal on, and that worked out just fine. They had this landing page, and this is the way we do these side by sides. The landing page has a big question: are you an accredited investor? And if they clicked and said yes, the investor went down the route of seeing their 506C on whatever portal they had it listed on. If they say no, they go down the route of seeing the regulation CF offering. Now, in their example, because it is public information, they raised $1.3, $1.4 million from these non-accredited investors. The other investors all went into the Reg D. Fantastic. They hit their goal. In terms of the investor processing, everybody that's going to invest, first they indicate they're interested in investing. Then they open an account with Crowdfund My Deal. What that just means is you're putting in your information. Then you have the ability to invest into any of the Crowdfund My Deal listed projects. And you just say how much you're going to invest. And then the wire, check delivery, the investment instructions comes up, and then you process your investment. All the funds from there go into a third-party escrow account. We don't touch the money. The issuers, the sponsors, don't touch the money until they have hit their minimum, or they're otherwise just ready for the cash after they've hit the minimum. And then it's up to the company, the issuer, to just be able to sweep the cash out at any time afterwards. And then it's just available at any time to use with the project.
Nice. No, that's helpful. It's unique. Their instance was very unique, as you guys said. So I just wanted to see how you guys structured that, because it seemed a little bit less common, if you will. But real quick, anybody have any questions based on, I guess, process, the legalities of the whole thing, any features, anything like that?
We either did way too good of a job or we bored y'all to death. So
Now I have a question. If some people may should could ask. Like the question is, people always ask like, when should we engage with you all? When should we think about a crowdfunding portal or so forth? And I think that is it maybe today, because of I think capital raising begins before you actually get a deal, right? We can help you structure out your plan before you can get a deal. So that way when you do your plan, you go faster. So I think that that's where the strategy kind of come in at, that call kind of come in at.
in
With that,
terms of
Jacob.
interacting and working with the portal, that's where that first step is testing the waters. So as soon as you think you have a deal, you can start getting the page live so you can start looking for those indications of interest.
We got a question from Jacob.
Can you use a crowdfund deal like this to raise for a fund to fund?
No.
Okay.
There is a limitation on investment companies.
Okay.
Fund of funds, it's the same thing as a mutual fund. We really don't think about it that way, but regulatorily it applies. So it has to be to acquire a designated property, a designated company, or you got a business startup or franchise. It's really those particular categories. You can do a real estate acquisition fund. You just can't do a fund of funds where you're buying into other syndications.
Okay.
From my understanding, like it has to actually apply to something specific, like a specific property, specific business, specific entity. Like a fund of fund is kind of general, like I'm a blind pool, right? These people money investing in this particular asset. Kevin King, what's going on? It's not his name.
How you doing? I'm sorry, I might have missed it. Are you able to publicly advertise for the crowdfunding?
My man, that's the whole point of doing it. We advertise,
Okay.
yes sir, yes sir. You get
All right.
everybody, not everybody.
Okay.
Regulation crowdfunding, it's there to reach out to the crowd.
Because you understand, like people tell you to do B's, but B's you can't tell nobody. I mean, you tell your family and friends, but however, with C's you can tell the city, right? I like B for my buddies, C for the city, right? So whatever crowdfunding is for, I guess, city and friends. So you can tell everybody about your deal. I mean, that's how I remember. I kept trying to figure out B and C and CF. So city and friends, you can tell everybody about it, about a deal.
Okay, now you said before you decide to get into that crowdfunding, you'd be able to take like a poll or something of like who would want to get into it?
Well, we got something called it's called, so we will create a page on our crowdfunding deal site called Testing the Waters.
Okay.
If you go to Krabby Cribs, visit investmentkrabbycribs.com, you'll see the process. It's 2 stage, and it'll take you, well, go to it tomorrow, because I gotta link the pages up. So you see how one will say test the waters, and it'll be a page like a deal page, general information as well, a tombstone offering, but it allows you to say, hey, I got a deal, I'm thinking about a deal, this is what I do. Would you be interested in investing in this deal, right? And it's an opportunity. So basically, it allows you to shop the opportunity around before you actually get involved in paying 15 grand or 30 grand for a B or a C offering. So it allows you to kind of test the waters to see if it might be interested in your deal.
Okay, thank you.
And I just dropped all my contact information in chat if anybody wants to reach out about any more particular information, legal requirements, process requirements. And I do see that we have a question regarding fees. With the regulation crowdfunding, and this applies to absolutely every Reg CF portal that's out there, we have compliance requirements. Most of the portals that have the marketplaces, they're advertising, bringing some investors to their marketplace. They're generally charging anywhere from 7 to 9% of the capital that comes in. We don't do the marketing or that compliance portal, so we only charge 2% of the capital that comes in. That's for our compliance services, plus there's a small tech fee, just to kind of put it out there. Lenny?
I'll let Rochelle go since I've asked a question already.
Oh, look at that shit is not dead. Look at that. Look at that gentleman.
Well, my question was similar. I was wondering how expensive it is compared to like a fund to fund, just because I know that the fund to fund model is really expensive to set up. So 2% makes sense.
In terms of the setup, because there's still the legal process behind it.
Okay.
But generally, especially if you're doing the side by side, the PPM, it's basically the exact same thing as the Form C in terms of the information that's disclosed. It doesn't cost all that much. Also, it is way cheaper to do just simply a Reg CF offering rather than the good old huge traditional PPMs. If you want more information about kind of the legal cost, there may be some accounting costs, feel free to reach out.
Okay. Thank you.
Go ahead. I know because I have my views on the fund to fund models that people promote hard right now, and I think that when in my experience, creating a fund was more challenging because of you had to get the funds from people who about entity that haven't existed yet, and as you have the funds, they're thinking about returns. So now you're stressed about getting to a deal because why you owe people some money as well, right? Because people want their money back. So it's like, can you pick the best deal when you're under that stress? So I think that fund to fund model is great if you have a good flow of deal flow coming in the back end. And as you understand, like when I was doing stuff, it was like chasing 3 rabbits, finding deals, underwriting, raising capital. Which one should I do today, right? So I mean, like if you're doing that majority of the time, the fund to fund model is not really for everyone, right? Because now you invest somebody else's deal who you believe is going to be great for your investor as well. So I think that a lot that's my spit on from the fund market. I know it's being promoted hard, but I think that it's not for everybody. I'm personally what level you at as far as being a capital raiser or raising capital.
Let me also note, just because it is coming up more and more, I'm speaking on it more and more. If you're putting them together, make sure you're asking your attorney about the Investment Company Act and the Investment Advisor Act. Unlike doing just the classic real estate syndications, there are a whole nother world of rules and regulations. You're acting as an investment advisor. Again, you're registered or you're exempt from registration. You're an investment company, like a hedge fund. If you're investing into other LLCs, you're buying stock just like a mutual fund. There's this Investment Company Act that you're either registered or exempt from registration. A lot of attorneys don't think about it or don't know about it. Make sure you're asking about it.
All right, Lenny, come here. We got Lenny. Talk to me.
Real quick, you had mentioned deal flow. Do you have any other deals that you're crowdfunding for outside of the Vegas one?
Yes, we actually got 5 in the pipeline. We have some hotel conversion coming up. We have a RV a guy got RV park, glam park. We have a gentleman who actually own a business. They're buying a location with his members to actually own a club. We have a couple things in the pipeline. We have a business is coming up. A business. They're doing the development for a business. So it's just like so crowdfunding, we heard GoFundMe and so forth. It's same as that similar process, but now we're doing it for business and real estate, right? So now you got to acquire certain things. So yes, crowdfunding can be done for multiple assets, right? We got a couple of things in the pipeline coming up.
And just to throw it out there, it is because we are recently registered with FINRA, so we're just recently able to take on the deals. But in terms of the tech, we worked with the Cadillac, the separate crowdfunding portal back-end development firm. So they set everything up on the technology side. Corneilous is really focused on the marketing side. And then we're at myself and my partners are focused on the legal due diligence side. And we've represented, I don't know, probably 100+ of these CF deals. So coming to the table with the best of everything, but in terms of the FINRA registration, it's fairly new.
Thank you, guys. Happy birthday again, Winston.
Appreciate you. And Cornelius, if you could put your information in the chat. I know Nate just did his, if you guys want to check that out and give them a call. And for this last minute before we get kicked off, I wanted to see what are some features or improvements that you guys are planning on adding to the software, because the space is always evolving, right? So what does that look like here in the future?
So one thing that we're adding is the CRM, right? We got I'm not sure y'all heard go high level, but we do have our capitalism toolkit process of it. Capitalism toolkit is a CRM, kind of help you get more exposure, and also we're working on building our marketplace out. That way that we have an audience to help you with your capital raising abilities. So I mean, working with agencies by getting you more exposure to your deal, if you will. So we're working on we're working with our issuers to see what else, what do you need, right? How can we increase your success rate? So so that's what we're doing, help you get more exposure and trying to make everything more seamless for you.
And I will say that uniquely, we are the only portal in America that is really allowing the side by side with the Reg Ds that don't go into the CF along with the CF. So in terms of doing these larger real estate syndications, there's only one source, and that's Crowdfund My Deal.
Well, talk your talk, man.
That's like mic drop. Like mic drop. I'm like that. Like mic drop.
Talk that talk. No, we really appreciate you guys hopping on. Again, I know in the crowdfunding space, it's something that's fairly new, but obviously it's going to be kicking off here within the real estate industry. So as you guys have in the chat, if you guys have anything you guys want to reach out to on the side, give Cornelius a shout, give Nate a shout. Again, appreciate you all, and that's all we got for today. Appreciate y'all.
Thank you all.
Thank you all.
Happy birthday, Winston.
Happy
Thank
birthday.
you so much.